Starting January 1st, 2026, several federal tax rules around charitable giving are changing. And regardless of if you itemize or you take deductions in the form of the standard deduction, these changes will affect you. Some donors will see new opportunities, others will see subtle limits. And if you give to charity or you plan to, understanding how these changes are going to affect you now gives you options instead of surprises. So for a long time, charitable tax rules mainly rewarded people who take itemized deductions, and that's changing. At the same time, itemizers, who are typically higher earners, will now face thresholds, reducing slightly the tax benefit of giving. None of this changes why people give, but it absolutely affects how and when giving is most tax efficient. So here are the 4 key changes that you should know. First, there's a brand new deduction for non-itemizers. Starting in 2026, taxpayers who take the standard deduction can once again deduct charitable giving. You'll be able to deduct up to $1,000 if you file individually, or $2,000 if you're married filing jointly. This is an above-the-line deduction, meaning that it applies in addition to the standard deduction that you'll take. And around 90% of taxpayers actually take the standard deduction today, and they currently receive no tax benefit for charitable giving. This change reintroduces a meaningful incentive, but it's limited to cash gifts made solely to public charities. Donations to donor-advised funds or private foundations do not qualify for this specific deduction. Second, there's a new 0.5% AGI floor for itemized charitable deductions. Beginning in 2026, if you itemize only a portion of your charitable giving that exceeds half of 1% of your adjusted gross income will actually be deductible. For example, for easy math, if your income is $100,000, the first $500 of giving will not count. If your income is $300,000, the first $1,500 will not count. For most households, this change will be relatively small, but it does make timing more important and make strategies like gift bunching more relevant. Third, there's a cap on the value of charitable deductions for high earners. Starting next year in 2026, taxpayers in the highest federal income bracket will see charitable deductions capped at 35%, even though the marginal top rate is 37%. This only affects the highest earners, but for large gifts, timing can matter. A major gift made in 2025 may provide slightly more tax benefit than the same gift in 2026. Now, we know that charitable giving is driven by mission and not by tax math, but this change narrows the benefit at the margins. And then finally, the 60% of AGI limit for cash gifts is now permanent. In the past, the 60% limit was temporary, but under the new law, it's been made here to stay. This is especially for donors who plan to give a large portion of their income in a single year, such as after selling a business, receiving a windfall, funding a major gift initiative, or a legacy gift. And with all these changes coming, 2025 becomes an important planning year. So if you itemize and you're considering a significant charitable gift, you may want to finalize those contributions before December 31st, this year, 2025. Under the current law, deductions aren't subject to the new AGI floor, and high earners receive the full value, based on their tax brackets in 2025. Some donors may also benefit from bunching multiple years of giving into 1 year to maximize deductions before the rules change. My advice is you let the nonprofit know that that's the actual case so that they can plan accordingly. And if you're in the highest tax bracket, timing large gifts before the new cap takes effect may also be worth considering. Charitable giving is about impact first, but thoughtful planning ensures more of your generosity goes to where you intend for it to go. And I've broken down each of these changes in more detail in the blog below, including examples and planning considerations. And so if you give regularly or you plan to, this is worth understanding before the new rules take effect. Enjoy.